Welcome, you're watching India Market Close. I'm Tamanna Inamdar, and it looks like this might be the afternoon that we hit the 26,000 mark. Will it or will we not? 23 points away, not that far at all. But remember, it's not looking something that's a complete shoo-in, because all day the Nifty has been sort of struggling in this range. Let's just pull up the intraday chart of the Nifty, just about 35 points up. So, of course, if I look at it from the point of view of distance to 26,000, we're looking comfortably placed. But the fact is, it's been a bit of a choppy day and a range-bound day as far as the Nifty is concerned. But right now, having said that, at the high point of the day for the Nifty, which was 25,993, you are still 25,973. So the closest you've come is 7 points away to 26,000. Let me just pull for you advanced decline ratios for a second and give you a sense if this is a broader market theme that we're seeing or something restricted to the Nifty. And no, it's not. Your advanced declines are even Steven right now, with actually the declines slightly above the advanced line. Like I told you, you had a strong start to the day, but midday through the day, the bears have been on top. The bulls really have been struggling to keep up the momentum in that sense. And you have had right now the declines well in place. Let's pull up the broader indices as well and see what's happening there, what's happening with the mid-cap and small-cap index before we get to the heat map and the sectoral indicators. The Nifty mid-cap 100 also just thereabouts, so less than 0.5% up. The small cap index also now in the red. So it's not looking that comfortably placed as much as we might celebrate the 26,000 mark. It's the bank Nifty really which has not been able to hold up. And let's just pull up the heat map for the afternoon and you'll get a sense of what has been working. It's largely been about metals, the China story. China doing everything it can in terms of rate moves, etc., policy moves to boost consumption. Biggest economy in the world consumes more, good for metals. That's the simple idea behind that. Look at it, Tata Steel, 5% up today. Hindalco doing really well. Old economy in the favorites list today. A bit of a bounce back on IT as well, which was languishing through most of the day and yesterday. So Tech Mahindra, HCL Tech, all of them doing fairly well. So is Wipro. M&M continuing strong on those reports of, I would say, new acquisitions or new tie-ups, so they haven't really come out and clarified. And yesterday's winners, which was life insurance, SBI Life languishing there at the bottom of the pile. HUL possibly hurting because of the adverse GST order against it, but all of your FMCG staples, Nestle, also down in the red. So it's even Stevens as far as at least the Nifty is concerned. I wouldn't be too sure we'd hit 26,000 Hersh today. It still looks like a tough fight unless there's a last-minute boost coming in, and maybe it's all about the individual stocks.
Tamanna, we said it yesterday, we have the whole week to do that. Hopefully some of our technical analysts can also help.
But we're moving towards it at a glacial pace. And this is a market where you're used to being on top gear. So that's I suppose, the only point.
Yes, or we can look at it on the more positive side to say that we were 7 points away from 26K. Yeah. So we've just come off, obviously, but that's the nature of the market. So. But interesting, of course, because metals taking the lead today is not something before the China data came out that anybody, I believe, was betting on. Yeah. Of course, that has really aided the index, of course. Banks taking a bit of a backseat today. So is IT still doing fairly well after yesterday's move. 0.8% higher on IT is definitely a positive. But let's move to broader markets. Let's pull up the Nifty mid-cap and small-cap indices. There you go. That's your mid-cap, around 1/5% higher. Even Steven on the advanced decline. Tamanna highlighted that. And 1/5% lower on the Nifty small-cap as well. So, largely flat, slight negative and slight positive biases on those broader markets, but nothing much in terms of movement. Let's talk about specific stocks because there's plenty of movement there. Let's talk about something like an AstraZeneca, new drug approval, stock up and away, 11% higher in trade. You're also seeing good traction on something like a power grid, positive brokerage note coming through. Also, the Khavda project in terms of transmission, interstate transmission to be managed by power grid. Khavda is, of course, the 30 gigawatt facility which is being put up in Gujarat. It's a fully renewable facility of Adani Power which is being put up. Let's also look at a Reliance Power. That one has been buzzing. Fundraise, of course, keeping it in focus. JTL Industries That one is flying away in trade as well. 9% higher now. We're close to the day's high, I believe. And company going to consider a stock split as well as a bonus. So keep your eye out on that one. Spandana approved sale of its portfolio. 300 crore portfolio sold down at just about 17 crores. But despite that, some positivity on the fact that some overhang likely goes away for Spandana, and portfolio which has been a bit of a drag kind of gets sold out, and some amount of resolution on that front a possibility. GR Infra, lowest bidder on a 900 crore project for the Nagpur Metro. So that one is up 2.5% on the back of that. PNB surprisingly fundraise at 109 in terms of the QIP. Floor price and stock, of course, right there, just about at 109 rupees. You're looking at marquee investors putting money, and let's switch focus to that. VIP Industries up 2+%, now 3.5+%. Vijay Kedia buying into that one. Sky Gold, Ashish Kacholia selling. This one has been a solid multi-bagger and now just about 2% higher despite that sale. New listings, well, we keep getting more new ones almost daily, and we have 3 new ones today doing fairly well, except Western Carriers, both Northern Arc as well as Arcade Developers giving good returns to IPO investors or those who really got lucky. Brokerages, there are tons of them. Let's quickly sift through just about 6. IEX, all of Power rather has had a note coming through, and you have IEX 11% lower on the back of that. Tata Power up just about 3%. Constructive, Paytm up 5.5%. MK Constructive on Paytm. You have Arvind's 5 spaces 40% upside. Stock is already up 18%, covering up for that. First Source, MK again Constructive, stock up 6%. Ipca Labs 2.3% higher, again on the back of a bullish Jeffries note. So tons to unpack. Of course, we'll try to do as much as we can on India Market Close. Tamanna, back to you.
No, just on IEX. IEX is interesting because it's retreating on the news, on a news report that the centre is planning on implementing market coupling for power exchanges, which means where buy bids and sell bids will be aggregated and matched. So for an exchange, basically a power exchange, that seems to be bad news. That's why IEX so hit. Aditya Agarwal with us. Let's start by asking him about IEX. He's head of research and investment at Invest for Edu. Kush Bora also joining us today, founder kushbora.com, as is Aditya Shah, founder Hercules Advisor. Actually, Aditya Shah, let me come to you first on IEX and whether there's no clarity right now, but do you see the possible news, the market coupling news, as a big downside for IEX?
Good evening, Tamanna. We've seen that IEX, this hangover has been there on IEX the last 1.5 years, where there have been random news of government wanting to employ market coupling. But in my view, as IEX management has also said this, nowhere in the world has market coupling been applied. And market coupling would then mean that exchanges lose their autonomy and exchanges don't discover price, and it is on a third exchange with a time lag. So in our opinion, in our in-depth study, market coupling is not something very easy to implement per se. And again, this is an overreaction to what is really happening. So I will advise investors to wait and watch. IEX is a great story for the next 5, 7, 10 years. But in our view, market coupling is not something that is really very implementable in the form that the government really wants, right?
So do you think that IEX is a buy right now when this overreaction recedes?
Yes. So IEX, as a disclosure, we hold IEX across our portfolios, and IEX is a good buy at a level of 200 rupees. We've seen the stock has risen from about 140, 150 for the last 1 year to about 200 or so. In our opinion, the volume growth for IEX has been really strong over the last 3 to 4 months, and it will continue to remain strong. Of course, IEX's market share over a period of time will come down from the 96, 97% that it is really holding. But over a period of time, the market will expand and IEX will be a major beneficiary of it. So, and again, the optionality on IEX also is IGX, where the gas exchange is also starting to come up and rev up. So in our view, IEX is a good stock to own over a longer period of time. However, regulatory challenges will always remain across not only IEX but all exchanges that are listed on. So in our view, positive on IEX. Wait for the panic to settle down, and then you can buy.
So positive on an IX once the panic settles down. We'll of course get Aditya Agarwala and Kush also to talk about IX. But I want to start with your views on the index. And Kush, let me come to you. The way we are sort of painfully moving towards 26,000. What's the story it's telling us?
First up, a very good afternoon to Tamanna, and to all the viewers. Well, this is like the Indian cricket team. You keep winning matches and the expectations just keep going higher, right?
Fair point.
Yeah. But I think I'll take this consolidation, if we can even call it that, with both arms open. This is a welcome move. It's still with a lot of positive bias. So I think 26,000 from here on is more of, the headlines. I'm sure your social media team has got all the graphics ready to perhaps post once, we hit that mark. But, that aside, I think this move is very encouraging. We were seeing a few negative divergences. Those got negated, with the Friday move. I think from here on, you should look at, 26,600 and 27,000 as the next target. Any kind of dips that come towards the 25,800 kind of mark should be taken as a entry point on the Nifty. So buy on dips kind of a setup, but overall the trajectory for Nifty remains normal.
Okay. What about you, Aditya? Aditya Agarwal, this question for you. Nifty and the 26,000 mark, and let's talk about the Bank Nifty as well.
Someone, I think by the time we end the show, Nifty can hit 26,000 in trade today itself. If you take a look at the momentum with which the markets are going up.
So now's your chance to predict it.
Okay, let's predict it. Nifty will hit 26,000 by the time we end the show.
Yeah, you're saying, okay, you're sticking your neck out and saying it?
Yes, Tamanna, sticking my neck out and saying that Nifty will hit 26,000 by the time we end the show. Even if it's for a brief period of time, if it is hitting, it will hit 26,000 for a brief period of time.
Super. I'm wondering, okay, Kush, you willing to stick your neck out?
Oh yeah, very much.
Okay. What about you, Aditya Shah? Do you want to join the party of the technical analysts who are looking at 26,000?
No, Tamanna. So it's a psychological mark. However, as the videos were floating around on social media, Nifty is supposed to go in the next 10 to 15 years to about 1 lakh and beyond. So not too much worried about the psychological mark and trying to bide our time into good quality stocks now.
Okay. Right. Any stocks on your radar? Aditya Agarwala, let me start with you. Stocks this afternoon.
So about a couple of them, Hersh, because the undertone of the market still remains strong. Take a look at the metals. They have been going very strong from the start of the day trading session. So I think Vedanta is something which is looking very interesting to me on the chart setup. One can definitely look at adding fresh positions at current levels. On the upside, looking at a target of 492 to about 500 and with a stop loss at 458. It's a buy recommendation on Vedanta. The second stock is ABB. Again, after a good consolidation, stock is showing some kind of a strength. On the upside, can test levels of 8550. So can be bought for a target of 8550 with a stop loss at 7800 on the downside.
Kush, your picks for this afternoon?
Sure, Hersh. Before that, every time I see Aditya Shah smirk, whenever you ask him these short-term level kind of questions, analysts will keep giving their views, these technical analysts, and I'm holding stocks for 10 years time frame. So yeah, that smirk is actually quite, very long-term investor
the
kind of a smile.
The real money is being made by Aditya Shah, it seems.
At present, I'm assuming it's with, lot of participants, except for those derivative traders whose study, SEBI just put out. Now, coming back to stocks, coming back to stocks, two of them, one of them from the realty space, Oberoi Realty, we're seeing a good bit of turnaround in a lot of these names. A good upswing. We've had a positive crossover on Oberoi Realty a couple of sessions back, and the momentum seems to be continuing. From a near-term perspective, 1935, 1970 are the targets to look at. 1870 is where you place your stop loss. From the pharma space, Bliss GVS Pharma. This stock, we've discussed it in the past, has had a good run, but then came in for a sharp round of profit booking. Rebounded from the 20-day moving average again, looking up. From a near-term perspective, the targets that you look at are 145 and 152. But I think if you want to be in this one for positionally, 170 is also not a bad target if you give it a few months. So Oberoi Realty and this GVS, these are the two picks for the day.
Okay, Aditya Shah, let me come to you. We have a whole bunch of IPOs which have debuted on the street. 3 in particular today, but a whole host of them over the last couple of weeks. Any ones which you found interesting, Aditya Shah?
Bajaj Housing Finance was something really very interesting to me from a company perspective.
Right.
But again, valuation is really out of bag with the listing that they have really had. So no comments particularly per se on the IPOs for now.
Okay.
No, so more just, Aditya, since he's asking you about IPOs, and that's really the flavor. I think MobiKwik IPO also announced today a whole host of them hitting the primary markets and all the action there, actually. So the technical analysts for many days don't have too much to say. No wonder Aditya Shah is the one laughing. But in your view, which are the ones which are looking most interesting?
So, of the IPOs that have listed today?
Listed today and the ones down the line. Which ones are you putting on your list?
So NTPC Green Energy, supposedly that IPO is to come out. That looks really very interesting. Again, Swiggy's IPO, I assume that Swiggy's IPO is also going to come out. So that also looks really very interesting, given the fact that now there is a duopoly in that market and Zomato has done pretty well over the last about 1.5 years. So those are the 2 IPOs that I'm specifically watching out for at this stage. Again, we invest very selectively in IPOs where we feel that the long-term potential of those companies is really very good and just not just for listing gains per se. So anything that I say is only for the long term and not for the shorter term listing pop per se.
Okay. Let's come to the stock of the day, AstraZeneca. Varsha is joining in with what's pushing the stock higher. Varsha, what's all the excitement about as far as AstraZeneca is concerned?
Well, Tamanna, we are speaking here about, if you see AstraZeneca has zoomed almost 12% in trade today. Now, this is on the back of company has received permission to import a cancer product called durvalumab in a specific dosage for an additional medical use. Now, note that company has been already selling this product and made almost 200 crores of revenue in FY24. If you see this drug is used in combination with chemotherapy before surgery and alone after surgery as well. Now, of course, the other thing is normally if you see AstraZeneca, India imports drugs from AstraZeneca, which is from US. It's from its parent company AstraZeneca Global from US and UK. And this product, the cancer product for which they've received the import note, the parent company is the only one who manufactures this product, and this is the reason we are seeing this buzz. Also, AstraZeneca was in news since last 1 month as the Indian government has reduced the custom duty on 3 important cancer drugs which AstraZeneca India sells. And if you see, those products are for breast cancer, for lung cancer, and additionally the GST rates on these drugs has been reduced from 12% to 5%, again beneficial for AstraZeneca. Now, why this buzz is because 62% of AstraZeneca's revenue is from oncology, that is from cancer products. Also, if you see, AstraZeneca Pharma and Mankind Pharma have partnered to accelerate access to asthma medicine, again growth trigger for AstraZeneca. And also there one of the product called Tegriso is one of the top 10 oncology brands in India and continues to be the largest oncology brand by sales for AstraZeneca. And lastly, if you see the stock performance for the company, in the last 6 months company has given almost 48% returns to its investors. In last 1 year, then the return has been gone to 64%. And the EBITDA margin, first if you see the financials for the company in the last 3 years, the revenue CAGR for the company has been around 17% and the profit CAGR has been around 18%, with the EBITDA margin, the blended EBITDA margin is around 14%. So because of this cancer drugs note, we are seeing this buzz in the stock.
Wow, I mean, stock up 16% now in trade. Thanks so much for that, Varsha. Great perspective. Aditya Shah, let me come to you with regard to this one. Just if you have any visibility with regard to what the quantum of impact on both top line as well as margins is going to be of this product in particular, any visibility?
So Harsh, I've not studied this product in depth, so will not be able to comment. However, this is really very positive for AstraZeneca that they will get a product which practically has no competition per se. So that is really positive. However, I want to warn investors that the stock is really very expensive, and one must be really very careful while trying to enter this stock. However, near term, things look really very positive with this development.
Okay, so while expensive, the chart intraday, if we can pull that up, looks extremely interesting. Kush, let me come to you on this one. We've just seen a bit of a spike on the chart, further spike on the chart, if I can call it, 5% spike it seems, after maybe up 10%. So what's the sense now on this one?
So, Harsh, I wouldn't recommend buying now, and that's not because the stock is up 16%. We've discussed, stocks like BSE, which have had a stellar run, and then, we've continued to remain positive on that, and then they've gone on to hit further highs. So, the big moves don't really worry me. What worries me on AstraZeneca is that if you see the last 3 to 4 months, there have been these select days when the stock has had phenomenal volume spikes, coupled with price spikes. But then thereafter, for a period of, let's say, 10 days to about 2 months.
Okay. If any of you were betting men, you would have won something today. Kush Bora and Aditya Agarwala. Aditya Shah, you said you don't really care, but 26,000 has been hit on the Nifty. We've hit the all-time high, guys. Slid slightly down, but here 26004 is the mark that I saw. This is stupendous. Whatever it may be, Harsh, I know it's just a number, but the fact that we have galloped to 26,000 with such ease in the last few trading sessions. I mean, look at the momentum we saw on Friday.
Yes.
Building on from there. And 26011, I'm sorry, 26,011 is the new mark and the new pinnacle for the Nifty. Let's see what's leading the pack. Let's pull up the heat map there and see what the winners are, the Nifty contributors, who's pulling up, which stocks are pulling up the Nifty right now. Tata Steel, Hindalco. And the fantastic thing I think about this in a way is that you've seen that 26,000 mark without any active participation of the banks. Just 37 sessions in that 1,000-point rally from 25,000 to 26,000. Let's get some interesting voices up on, talking about what we can see here. But just Nifty contributors, if we can, for a second. I just want to pull up Nifty contributors for a second and see what's really pulled up the markets this afternoon. Yes, it is an HDFC Bank with 17 points up. But, this is something that can be a heavy lifter at the best of times. Abhay Agarwala on the phone with us right now. Abhay, can you hear me?
Yes, I can hear you clearly.
Hi, congratulations. Exciting times. Exciting times. I know you're a market veteran who's seen many milestones hit. Is this one special because of the speed and the fact that so many domestic investors have contributed to it?
Yeah, and congratulations to every market participant, who has stayed invested, who has shown faith in the, most difficult times. I remember not that far back in May of 22, and there was, an FPI exodus, and a lot of retail investors were told that, look, FPIs are leaving the country and, they are exiting and they're very smart. So maybe retail should also cut positions and wait for better times. I'm glad that, the retail investors and the domestic investors did not do that. They continued, to invest in a very sensible manner through SIPs and other modes. And I think the result is for us to see that, we're all very confident on the longer term, expectations from India's returns. There will be volatility on the way, but it is remarkable to see, new levels being created and international investors' interest getting spiked in Indian equities.
Yeah, right. Abhay, this is Hersh also joining in. Of course, we've done really well through this year. Do you believe earnings compounding can keep up with the kind of valuations and numbers and benchmarks that we are breaching on a daily basis?
Oh, we seem to have lost the line. Abhay, can you hear us?
Yeah, that is right, Hersh. I think what is going to happen is that there will obviously be, times when there will be profit booking and the markets will slide. There will be bouts of volatility. But I think if you look at the longer term trend, if you look at 2-year cycles or 3-year cycles, the trend is constantly up despite the bouts of profit booking in between. So valuations in India have always been questioned, but at the same time, we are a small economy by global standards, fastest growing economy. So if the global investors have to look at one place that they can bet with a lot of conviction for the next decade of growth in earnings, it is India. So I'm not surprised that, the kind of reduction in cost of capital globally will drive money to emerging markets, and I think India will continue to be a major beneficiary of that flow of capital.
Abhay, that flow of capital that we're talking about, the question is where is it coming? And just when we hit the 26,000 pound, we were talking about how banks have not quite participated. I mean, HDFC Bank doing well on the Nifty as a key contributor, but in general, banks have been a little tepid. Do you think that up move is yet to be seen in this current phase of a bull run?
I think there will be some catch-up rally there, but I think clearly the investors are now focusing on where will next 3 to 5 years of growth will come from. And I think you will see emergence of new sectors that are now gearing up for a rally, and these include clean energy. Clean energy will be a major beneficiary of new capital flow. You will see money coming into semiconductor companies. You will see money coming into companies that are using drone tech or satellite-based navigation systems. So I think a lot of new sectors will open up in India, and I'm glad to see the kind of listings that are taking place because it is giving a wider canvas for Indian and global investors to back Indian companies. So I think while the traditional sectors like autos and banks will continue to get regular flows, I think the next 5-year story is more in the emerging sectors where you will see a lot of replacement of imports, especially from China, in complex electronics, in APIs, in contract manufacturing of drugs for global players. So I think some of these sectors will see a massive outperformance over the next 3 to 5 years.
Abhay, I just want to touch upon flows because it's funny because you've seen retail flows really guiding the Nifty to this benchmark. What happens when foreign flows participate along with retail flows? I mean, just wanting to fathom that.
Yeah, I think Hersh, what will happen is, I guess, close to what is happening now, because if you look at it, the FPI holding fell to like a 12-year low recently when it went down to just about 17% from more than 20%. So which means that by historical benchmarks, the FPI holding in Indian stocks is at more than a decade low. I don't think it can stay there. I don't think it has room to fall further. So what we are seeing is, the FPI is kind of, if I can use the phrase, throwing in the towel and saying, look, we cannot be underinvested in India and we have to back the Indian story. So in September, we have already seen almost, $10 billion of FPI's flows come in after a long period of time. And that has taken the market very sharply from 25,000 to 26,000 levels now. I think I can't call a reversal on that. I think that will continue to be the case because there is a lot of global liquidity that is kicking around that still needs to get invested somewhere. And I think if China reflates, India will also be a beneficiary of that. So I think the emerging market flows and India flows will continue to be strong, Hersh.
And what are the sectors that you are liking, or some of the stocks that are on top of the heap? You talked about semiconductors briefly. Abhay, is that the general direction? The smart money looking at where the policy push is?
No, I think the smart money will definitely back the policy push. And the good thing is that the government's policy push has been very clear for the last almost 10 years. When the whole PLI scheme started for different sectors, we saw it start with electronics to replace China imports, and big beneficiaries were companies like Dixon, where the stock went up from like 700 rupees to 14,000 rupees now. And I think in India, investors who have traditionally backed with patience government's policy direction, have made money, and new companies, new sectors have emerged from that. So I think where we are bullish right now is, obviously semiconductor, drone, and anything that caters to defense, because I think in defense, India is underinvested a lot. We are like almost 20 years behind China. There's a lot of catch-up investing that needs to be done by our defense forces. So I think that will create new winners in that space, in private company space. And then we are quite bullish on insurance space, because I think insurance is another sector that government will have to push and support, to make sure that, there is less burden on the government machinery to provide healthcare support. So there are sectors. The battery space is another one we like, because electrification of vehicles is something that is going to give the battery manufacturers, especially on the EV side, a lot of support. So I think one needs to just focus on these new emerging opportunities where government is very focused, doing a lot of stuff, and I think the results will be there to see in a couple of years' time.
Thank you so much, Abhay Agarwal, MD of Piper Serica there, and thank you, Abhay, for the quick, take on what is definitely momentous. We're sliding off after that, some, fatigue setting in. So look at the intraday chart, and you're seeing the Nifty come off that 26,000 mark. That's all right. That was to be expected. But 26,011 is your new summit as far as the Nifty is concerned. Bajaj Auto, Shriram Finance, Bharti Airtel, Bajaj Finserv have risen the most in the last 1,000-point rally, and have been some of the top gainers. Top gainers, in fact, include HDFC Bank, ICICI Bank, Bharti Airtel. They're the top contributors to the Nifty's 1,000-point gain. So obviously the heavyweights. This is despite ICICI Bank really, taking a breather, yes, in yesterday's trade, but Bharti Airtel definitely, and HDFC Bank, some of the top contributors. Let's come to our analysts who are talking about what to do next. The question really is what to do next. What do you do now? Aditya Agarwala, let me come to you. Metals. Are you looking at metals, the rally continuing? Do you have a fresh call on the index? And yeah, congratulations for sticking your neck out and calling it.
It was just a fluke, Tamanna, to be honest. You can take a bet. You never know whether it's going to hit a 26,000 or not. We all just try and make it.
No stakes and low stakes bet. Because if it didn't hit, it wasn't as if, you were going to get penalized.
No, I think for now, 26,000 could be the top. I guess you will have some kind of a cool off on the Nifty and the Bank Nifty from here on, because these are some psychological levels. Once you hit, it's difficult to cross them instantly again. And if you don't close above 26,000 in trade today, I think you could be in for some kind of a cool off, 150 point cool off, which is okay on the Nifty and then the Bank Nifty as well. If you ask me about special sectors, specifically the ones to bet on, I would still heavily go on IT. I would go on metal, maybe more of a trading bet on a metal. IT is definitely something that I would like to stick my neck out and stay invested for at least a quarter or 2 quarters, if not more. And look at large cap IT names like TCS, Infosys, HCL Tech. I think it's time to look at these large cap IT names, and they will outperform going ahead. Next in line will be some of these NBFCs and banks. Again, to name few, HDFC Bank and the Bajaj Twins. I think these are some of the stocks, if you hold them in your portfolio for next 2-3 quarters, they're going to give you good, decent money. I would like to switch my portfolio, honestly, if you ask me, for next 6 months to about a year's time, from a mid-cap, small-cap heavy to a large-cap heavy, because I clearly feel that all this euphoria is okay, but the moment you see corrections in the mid-cap and the small-cap, and it's going to be sharp, and you won't be able to exit at that point of time. So it's prudent to book partial profits somewhere in your mid-cap and the large-caps end of the market, and maybe switch your portfolio to large caps and look at these names like ITs and NBFCs. Select metal packs can also be looked at.
Okay. Two calls, Aditya. Sectors, yes, but when you're saying you're rotating to large caps, your top 2 calls.
So Bajaj Finserv is something, Tamanna, which I will definitely have in my portfolio and hold it out for at least a year, and look for a target of at least 2,500 on the upside with a good support on the downside at 1,700. The second stock, if I have to buy, is going to be Infosys. That too, I think, should be bought and held in your portfolio at current levels. And hold on to it for at least a target of 2,400 on the upside with a good support on the downside at 1,800.
When you go large cap, this is as large cap can get. Bajaj Finserv and Infosys. Let's go classic. Kush, are your post 26,000 picks looking like that?
But before that, the only small regret, if I can use that word, is we didn't have any stakes on this one. I mean, at the very least, we should have we should have
You
just
are
taken
all
off.
stakeholders in the market. Everyone's going home a winner.
Of course, of course. No, I agree with Aditya that there could be a bit of a pullback here. But I'll tell you what, if you look at the options data, it's not really as uh, I don't think pessimistic is the word, or even cautionary, because 25,800 was the strike price. When we did the FNO show early in the morning, that's the strike that had the highest put base. Now that has actually moved to 25,900, which is suggesting that even though we've hit the psychological mark, and we've had this good run up in the last 3 days, I don't think the market is too worried about a very big meaningful kind of a pullback. So the levels remain the same pretty much. 25,800, 850 thereabouts. I mean, if it does dip to those levels, should be a good entry point to play for 26,200 and then perhaps 26,600 kind of levels. So all in all, views positive. I think for me, and we've been talking about this for a while now, which is the bank Nifty, the banking index and the banking stocks. They've come to the party. A lot of names are missing, from the biggest contributors, but I think going forward, these names will continue to contribute. So if I were to, reshuffle my portfolio, I'd add perhaps a couple of banking names to it, and not an index heavyweight, but I wouldn't mind adding the chemical names that we've been discussing time and again. A lot of those, like the likes of ME Organics, Himadri Speciality, UPL, they've already done quite a lot. So again, not an index heavyweight, but these stocks, after a brief pause, might, very well could continue to, move higher. So banking, chemical, these are some of the names, and consumption, not FMCG, consumption. These are some of the names that, I would reshuffle my portfolio to if I were doing that.
Aditya Shah, you're the only one who's not looking so enthusiastic. Question of valuations troubling you? Are you the pragmatic voice on this show right now, the voice of reason?
Tamanna, before he answers that, he is playing for 1 lakh Nifty. We shouldn't even be bothering him for 26,000 and 26,200 kind of Nifty.
Right? No harm in being happy today also, but no, I'm just, and that's important. You need the voice of reason. I'm wondering if Aditya Shah is the voice of reason.
Or the voice of caution.
Yeah, definitely. So definitely, as the previous guest was also saying, some of these themes like the EMS theme or the defense theme, you're already seeing correction playing out in the defense sector. In the EMS sector, stocks are valued at 100, 150 multiple. Of course, there's government policy push there, but the valuations are so aggressive that these stocks could undergo some time correction. So my perspective about the markets is absolutely very clear that wherever within the small and the mid cap space, the valuations are extremely aggressive. Investors need to be really very cautious. Time and again, over the period of last 10 years, we've seen whenever there is a ferocious rally within the small and the mid cap space, and there is a divergence between the valuations of the large caps and the mid caps, where the valuations of the large caps are going down and the small and the mid caps are going up. In the subsequent years, we have seen the large caps do really well and the small and the mid caps literally getting butchered out. So investors need to be really very cautious. Evaluate your companies. It is not to say that small caps will not do well from here on as well. Selectively, now it's a very selective market where valuations are okay, where companies do really well. Their companies and the stock prices will do exceptionally well over the next 2 to 3 years. But our bias now is completely switched towards the large cap side of the market, where over the last 2 to 3 years, stocks have done absolutely nothing. So that's the target now, at least for the next 1 or 2 years, to look at companies, to not speculate in the market and have a little bit of large capish bias towards the portfolio.
Very, very quickly, past interactions, you've been bullish on some of the private sector banks, which are heavyweights on the index in itself. They yet have to make any major moves. So this 26K should not be a surprise for you at all.
No, so I feel that since the large banks not performed, specifically HDFC or an ICICI, and still the market is moving up. So I feel that even if there's a correction, the index will not do a correction, whereas the smaller and the mid-cap stocks start to do a correction. We are very positive, larger lenders. Specifically, if you see Bajaj Finance, there has been a lot of value unlocking that has taken place through the Bajaj Housing Finance subsidiary, even though the Bajaj Finance stock has done practically nothing over the last 2 to 3 years. So my perspective is where there has been a sharp valuation derating over the last 2 to 3 years, not only in lenders but other large cap stocks. That is where the real value is, because the valuation multiple of 70 of most of the large cap 60, 70, 80 of most of the small cap stocks, even though they are growing fast, is practically unsustainable over a longer period of time, in my opinion. There has to be a little bit of valuation correction there, and then the market can really move on. So my perspective is I'm positive on larger private sector banks, specifically the likes of HDFC, ICICI, or even a Bajaj Finance. From that perspective, rate cuts will be definitely positive for companies like Bajaj Finance.
Right. Time to slip into a short break. On the other side, of course, we'll get you BTST ideas. It's a very interesting Tuesday afternoon. We are well off the highs. In fact, we've fallen quite a bit. Stay tuned. More action on the other side of this short break.
Okay, welcome back. So we've celebrated quite a fair bit about the Nifty hitting 26,000, but the fact is that it's come off quite sharply as well. Let's just pull up the Nifty down 60 odd points from the high point of the day, 60, 70 odd points. So you are seeing that pressure coming in. The small cap index, meanwhile, is in the red now. So is the mid cap. 67 points down from the day's high is the state as far as the Nifty is concerned. The mid cap 100 thereabouts, just about holding on to the green. In terms of what sectors are working, IT continues to be, steel continues to be, power is doing fairly well as well. One of the reasons, of course, is this input that has come from Motilal Oswal. They've initiated coverage on power sector. In fact, Mehika is joining us with more details.
They have initiated coverage on the Indian power sector with a buy rating on Power Grid, JSW Energy and Tata Power. They expect Power Grid, JSW Energy and Tata Power to have the highest upside in the range of 16 to 24%, while they maintain a neutral in NTPC and IEX, with IEX having a 5% downside. Now, Power Grid could be the bellwether play on the 2 lakh crore transmission opportunity, whereas JSW Energy could have key differentiators in execution, asset turnaround, as well as robust balance sheet. And they have said that Tata Power the lower earnings volatility could give scope for a re-rating. In terms of view on the overall sector, well, the investment opportunity lies in 40 lakh crore rupees over the next decade, with generation, transmission, and smart metering accounting for maximum of the investment opportunity. They expect the power consumption to also grow at a 7% CAGR over the next decade, and EVs and data centers to drive 1/3 of power demand growth by 2035.
Okay, so just so much happening in power. Of course, we spoke about IEX, but within the Gencos, anything interesting that you are seeing, Aditya Shah, if I can? Aditya, sense with regard to how this plays out over the medium term. Of course, over the last 2 to 3 years, some of these power stocks have done very, very well, including on the transmission side, Power Grid as well. What's the sense now? Any attractive ideas?
So what is really happening is government is fundamentally changing how power is delivered, and it has made massive changes on how contracts are being given out to the power generators per se. So that's where the change has happened, and a lot of these stocks have done really well. In our view, the number one stock that we currently have and we are bullish on is IEX, because we feel that over the next 5 to 10 years, the trading of power is going to expand in a very big way, and IEX is going to be major beneficiary there. Then within the power generator side of it, Tata Power is something that looks really very interesting. Again, not a very cheap stock, really very expensive. With the rally that the entire power sector has had over the last 2 to 3 years, stocks are really very expensive, and we tend to stick to these two stocks, which is IEX and Tata Power.
Those two stocks, Aditya Agarwala, let me come to you. Views on the power pack, any specific ones, especially IEX? I'm not sure we took your view on that one.
Let's first talk about IEX, Hersh, and then we can take a look at the rest of the power companies. IEX, I think if somebody has the capacity to buy and hold through the volatility of the stock, I think it's a good idea to go long at current levels itself. Maybe place a stop loss just below 207, 206 odd levels, and one can actually look at initiating a fresh long position. Interesting, a stock did take support at 61.8% retracement of their entire previous move. So I think you can have a bottom out formation in trade today, or maybe in a couple of trading sessions, and from there a stock can start to go higher. I don't think stock will test levels of 240 and 15 in a hurry, but yeah, 220, 230 something that one can look at. Looking at talking about the rest of the power pack, I think Tata Power is something which is definitely looking very interesting to me. In fact, as a disclosure, this is one stock which has been recommended to our clients as well. On the upside, looking at a target of 500 and 510, and at current levels also, I think one can look at fresh addition in the stock. The second one which stands out for me in this play is SJVN is also looking very interesting to me. After a decent correction, stock has taken support at 200 DMN. From there, it's showing some kind of a consolidation. So maybe with a stop loss just below 120 or maybe at 120, one can look at a fresh long addition in the stock for a target of 160 on the upside. So SJV and Tata Power, the two stocks which I definitely think can be bought. And for the ones who can take slightly riskier bets, can look at IEX as well at current levels.
Kush, views if any?
Again, very interesting space. We know a lot of traction. Tata Power has already been spoken about. I think one name that I'll add is GPIL. This stock has had a slump of over the last 2 months or so, but back with a bang in the last 2 sessions today on the back of massive volumes. Clearly past all the near-term averages. So I think this move could continue from the near-term perspective as well. We're looking at a 1090 and once that is taken out, a 1150 as well as targets. So GPIL back on the radar. The moves continue to be strong for the last couple of days at least, including today. The stop loss on this one is at 990.
Okay, let's switch focus though. VIP Industries is something that Vijay Kedia has been looking at. He's picked up around 7.2 odd lakh shares, and the stock is up and away, now in trade 4% higher. Mahima joins us with more on that one. Mahima, just give us the story on maybe VIP's journey, some perspective.
Absolutely. So just for viewers' context, in terms of stock rally, it did touch an intraday high of 6% today. And in March itself this year, it did recover from its 3-year low. And 1 month, it's been up around 24%. However, 1 year, it's been down around 12%. But why the rally? Well, as you rightly mentioned, Kedia Securities has bought around 7.25 crore shares, 2.5 lakh shares. And this is around 0.5% of overall equity at 545 a piece. Now, in terms of how the company has been performing in terms of Q1, the e-commerce channel grew significantly for the company by 66%, and they've successfully reduced their inventory by 120 crore. And currently, their inventory as of Q1 stood at roughly 6 lakh, and their monthly sales rate is about 150 pieces. So by September end, they're expecting their inventory to completely go to zero. And gross margins, however, declined by 510 basis points. Now, this was on account of soft luggage liquidation as well as changes in the channel mix. Now, under absorption of overheads has also taken place for the company due to lower production in Bangladesh. But the management is extremely positive when it comes to the guidance. They've said that they've gained 2% market share in Q1, and they're expecting further 2% market share again in Q2. And they're also anticipating improvement in terms of profitability from Q3 FY25. Now, there was a very interesting note by Investec on luggage industry, which said that the overall luggage industry is estimated to be marketed at around 150 billion rupees by FY26 end, and this could possibly benefit VIP Industries as well as the other listed player, that is Safari Industries. Now, in terms of company's overall performance from a longer term perspective, well, revenue 4-year CAGR has been around 5.5%, and EPS has had a degrowth of around 4% in last 2 years, and margins have shrunk from 15% to right now 9% in 2024. Lastly, in terms of valuation, as compared to its peers Safari Industries, VIP is valued at 150 times versus that of 66 times of Safari. However, going forward in 2026 estimates as per Bloomberg, the valuations will go down to 40 times, whereas Safari's valuations will stay at around 47 times. So, like Vijay Kedia also mentioned in his tweet, this is a long-term stock that if one is eyeing to have in its portfolio. And this is the overall summary of how VIP has performed so far.
Thanks for that, Mahima, and important that you mentioned what Vijay Kedia actually said, because that's one of the reasons the stock is up, because you have an astute investor like Mr. Kedia who's buying it. And what he says, and I'll just repeat, he says the stock is quite expensive and will require patience. Please keep this in mind before investing. And that's the name of the game, isn't it, Aditya Shah? Should a patient investor look at VIP right now at these levels and after this run-up?
Absolutely. Mr. Vijay Kedia's tweet is bang on. We've seen VIP Industries really struggle over the last 2 to 3 years. There have been CFO resignations, there have been CEO resignations as well. And the entire management has seen a complete rejig. So we need to be carefully monitor the business performance over the period of next 1.5 years before taking a call. Big investors, for big investors, this is a really small position, and they have investments across all other sectors in the market. So I would be really very careful. Of course, Vijay Kedia lending a supporting hand to the stock is really good news, but I will wait for the business performance and management stability to come in before trying to invest in this stock.
Okay, so what about on the charts, Kush, VIP? Are you interested in the stock? Does it look interesting or good on the charts, a good buy right now?
Not at the moment. A couple of reasons is that, the last 2 days of move has actually placed it in the overheating territory on the daily setup. Plus, if you see the medium-term setup, then there is a falling trendline resistance close to that, 600, 605 kind of zone. So from a near-term perspective, the risk-reward ratio will not be as favorable. But if it does dip towards, let's say, 550, 555 kind of zones, then still, makes an interesting buy from a risk-reward standpoint. And, you might want to hold on to this one for some time. Once the 605 resistance is taken out, then you're looking at a 640 and a 670. And your stop loss in that case comes in at 510.
Let's come in with BTST ideas. Last few minutes of close, you're obviously not anywhere close to the 26,000 mark. In fact, quite a bit of a pull off quite a bit of a pull-off on the Nifty as well. So, yeah, you're about 8 points up now. I think we will have to look at whether we close in the green or not on the Nifty. In that sense, Aditya Agarwala, what is your top BTST idea or a couple of them?
So I've got a buy recommendation, Tamanna. Liberty Shoe is something which is looking interesting to me. A good volume build-up here. After a decent consolidation, it's up and running again. So at current levels, I'll be a buyer in Liberty Shoe with the stop loss just below 500 and look for a target of at least 600 on the upside. For a BTST target, maybe a 560, 550, something that one can look at. And if somebody is holding onto it, maybe a 600 plus is something that one can eye for. So this is one stock that I'm looking at for a BTST candidate.
Kush, any views? BTST?
MCX, that stock is looking good. It's had a very steady run over the last couple of months. Coming to a mild bit of profit booking and consolidation today, but on the whole, the trajectory is pretty strong on the move. On the way higher. Now, from a near-term perspective, we could look at targets of 59.90 and 6,080, and a stop loss on this one is at 57.20. So MCX looks strong. A day of consolidation, but overall the strength is there in the stock to move higher.
Okay. I also see a couple of other volume buzzers, something like a Paytm, Kush. Up 5%. Volumes are strong, at least look strong. Sense with regard to this one, widely tracked.
So, Hersh, I think, this was about a month or so ago when, I think it was Tamanna who asked me, what's your view on Paytm? And then we said that from a risk reward standpoint, Paytm looks like a very interesting buy where the support came in at 490 and, the targets on the higher side were 600 plus. So, gone way past that. Now consolidating, not a bad idea to accumulate at these levels as well. I'll give you slightly broad targets, which is 640 on the downside. You could place a stop loss there. On the upside, you're now looking at the 725 and once that is taken out, the 760 also. So this brief period of consolidation over the last 8-10 days is pretty healthy after the good run that the stock has already seen. So continue to hold if you've got one, if you've got a position. If not, you could accumulate at the current juncture as well.
And Aditya, let me come to you. First Source up 6%, strong volumes. MK note on the fundamental side of things. Anything you're seeing on technicals?
Oh, definitely, Hersh. It's a fresh breakout for the stock after a good consolidation. At current levels, also, if somebody is looking at a fresh entry, can do so with a stop loss close to about 325, 320 odd. Can look at fresh addition for a target of 375 on the upside. So 375 on the upside, 320 on the downside. Target risk to reward is also in favor of going long at current levels. So yeah, First Source definitely looks interesting.
All right. Thank you so much, Aditya and Kush, for speaking with us today. And for all the excitement on the 26,000 mark hit but retraced, but that's okay. It's only Tuesday, and I would say a terrific Tuesday. 25,947. So just let's pull up the intraday of the Nifty and give you a sense of the kind of pullback that we've seen and technically you would expect it. That spike there, Hersh, is very telling. That's when you hit the 26,011, and then a sharp pull off right towards the end. So sustaining above the 26,000 mark is the next test. But look at the trajectory of the Nifty. So nothing much to complain. Let's see where the pressure has come in from. And let's pull up Nifty contributors in the heat map for a second before I hand it over to Hersh for the broader markets. But so I don't know if an HUL would really pull down that much. Kotak Mahindra Bank, SBI Life. Remember, BFSI is not really contributing as much as it could, which is perhaps why the Nifty is finding it difficult to hold on. And HDFC Bank, even on its mighty shoulders, can do only that much. Let's pull up the heat map. We're just a couple of minutes, I think a minute or so away from close. And nothing too much has changed in terms of color, more red than green, perhaps from when we started off in the show. But the top line is pretty much intact. I think Adani Enterprises is one entrant over there, about 2% up. Can I pull the intraday for the Adani Enterprises stock just for a second and see if that's a late up move we've seen? But HCL Tech makes its mark. Yeah, that is exactly what has happened. You've seen an up move in the last few minutes of trade coming in on Adani end, and it's made it to the top row of the Nifty. But coming back to the heat map, you have tech stocks which have worked today. You have steel, a smattering of auto. Bajaj Auto continues to be the favorite. And some of those big contributors, Hersh, Bajaj Finserv, Bajaj Auto, ICICI Bank and HDFC Bank, those are the big ones. That
in fact, let's pull up the Nifty Bank as well, intraday, if we can, because Likely the trajectory, at least of the fall from the high.
Ooh.
That's essentially what I was
what's happened.
looking for, rather. So, so it was aided. The Nifty was aided by the bank, and thereafter, because there was some weakness there, it seems the Nifty has also given way. That seems to be what's happening. But anyway, let's pull up the broader markets. The Nifty mid cap, small cap. Let's see where they've closed. Before we look at the breadth, there you go, 0.25% on the mid cap, exactly where we started at least the last hour with. And the Nifty small cap as well, there you go, no real move in the last hour on either of these. So it's Nifty bank led completely. And if we can, there you go, that's the BSE 500. We've spoken about a whole host of these names. We've tried to cram them on this show and we've managed to hopefully to do a lot of that, especially the top ones, both AstraZeneca and IEX. We've spoken plenty about those. But Amber Enterprises down 4.5%+ after the kind of surge it saw yesterday.
Yeah.
Clearly something worth noting.
HFCL as well.
Yes.
HFCL as well on the winners list yesterday and seeing sharp profit booking coming in.
Yeah, VST Industries, that one again, second consecutive day, sharp decline. JM Financial, that one's been volatile to say the least. First Source had a positive note. Paytm too had a constructive note. Both of those are, 10 of the top gainers on the BSE 500. So, but that's all we have actually. From Tamanna, myself, everyone who puts the show together, thanks so much for watching. And of course, we'll see you tomorrow morning.